Kaspar, good afternoon. We didn't do a video last week, but thank goodness you're back.
Yes, give us your time already. I was thinking
Give him a thumb, please. It's of course it's not interactive.
We wait a little bit that you push the thumb.
So last week we talked about gold in the Netherlands, in Dutch. In the Netherlands, we talked in Dutch about it. Now we're going to talk about stocks again because we're stock idiots. No, that's a kiddie. We're going to talk about stocks.
Yeah, and what you see this year, a lot of stocks are falling, and I think we discussed in the last weeks in the negative atmosphere there was some positive news, some chances, some possibilities. Look at this sector, look at this stock. There is music in it. Yeah. But I think if a stock falls, you can say two things. You have two groups of people that say what goes down must go up. But you have also another group that say never catch a falling knife. And now the market is more positive, so we bring it a little bit in the middle. So we are now on the negative side. So be careful with stocks that are trading very low. There are a lot of stocks with a lot of opportunities in it, but be careful because there are also stocks, even when they are 80 or 90% lower, don't touch it.
No, exactly, because they're not there with no reason. They are there for a reason. Yeah. So now, of course, everybody is wondering what stocks are we going to talk about? We're going to talk about Beyond Meat, you in this case, and I'm going to talk about Rivian.
Yes.
You know Rivian?
I know, it's beautiful.
I like it a lot as well. I told you before. I really like those cars. There's this The Long Way Up, this series on I think it's HBO or something. That's the coffee machine. This is live, so everybody, it's not those things happen. And what they do actually is they go on electrical Harleys. They go from Ushuaia in Argentina all the way to Los Angeles, and then they're followed by backup trucks, and those are Rivians. And that was the first time I saw these Rivians, and I really liked it because there's a system in it. If you go below a certain amount of kilometers an hour, the battery charges. So then they are all the time, of course, in the middle of the Atacama Desert, and then they need to charge these cars, so they need to go at 15 miles an hour to recharge the batteries. But I think it's cool, you know, because you can at least charge, not depending on the charging station. So, but anyway, it's pickup trucks. They're big, they're huge. Rivian initially came on the market, the stock market, I think it was 4 years ago. But please don't pay me down because I didn't check the chart. I should have done it.
No, it's also not that important for
no, but it came on the market for $120 US. At the moment, it's trading at 28. So
repeat that slowly.
$120 came on the market, and now you can buy them for 28.
Well, that's cheap.
That's really cheap. Yeah. Whoa. So you can buy them $100 cheaper, or for $100 less. But are they really so cheap? So, of course,
that's a good. Is it still expensive?
Is it still expensive? So, if we look at what Wall Street is saying about this stock, they have a target price of 51.83. So, sounds good. Implicit, that means they will make possibly 84% in a year's time if they comply with what they say. But and also one last positive thing about this stock, it has an overweight rating, which basically means that the analysts think altogether that it should have a higher weighing within the index because it's like under weighted within the index. The market cap is 29 billion, so it's not really small. It's quite big actually. Yeah. Fundamentally, so that's already part of the fundamentals, of course. They have a revenue of 55 million last year. They had 55 million. That's really nothing. They didn't do anything. But this year is 1.8 billion with a B from Bernard.
Percentage-wise, it's quite
massive.
An increase.
Yeah, if you manage to do that, you would say, whoa, this is amazing. But they also managed, with this revenue of 1.8 billion, to generate a loss of 5.8 billion. And I don't think that's very good.
But it's a startup. Yeah.
It's a startup, okay, but of course, it's a lot of money. Yeah. Asset-wise, they have 17.1 billion versus 1.2 billion of debt. So that's sort of like, okay. So interest rate rises shouldn't affect them so much because their debt is not that big. Looking at what they're actually doing, are they producing cars? Yes, they plan to deliver 25,000 of these beautiful cars in 2022. Produce them at least, and then
only in the US, no?
Only the US, yeah. And that's of those 25,000, they have delivered 14,000. So they still have 1 month to deliver the remaining 11,000 because we're at the 10th of November. They state that they have 114,000 orders for cars for the next years. So they have a pipeline of deliveries.
Yeah, and that you have, if you saw the documentary on Netflix about the DeLorean.
Yeah.
I hope that those people that already paid some money down and signed some contracts.
I do hope so. Tesla did that in the past. No, you had to give some money, I think, to reserve a car.
But I think a lot of people, it's a beautiful car. And it's around $100,000, and that is quite expensive for a US car.
It's not cheap.
No,
and also, I mean, what is important here is that why is it then dangerous to look at it? Because they lose per share $1.82, which is quite a lot. Huh? They have 13.8 billion on cash, so they can keep burning money. But if you look at the rhythm with which they are burning the cash, they burn 2 billion a quarter. The last quarter to now. So that could be, well, that goes really quickly. By the end of next year, if they don't increase production, etc., they will be losing more and more money.
Do you know by any chance what the expectations are for next year?
For the stock?
No, for how many cars they're going to deliver.
They estimate 100,000 approximately.
Okay.
But they have to comply with it. And another positive thing is that's why the stock went up yesterday. Is that the company said it is planning to spend less than what they initially stated. So I said in the Dutch video that they are suffering from inflation, but they are actually saying that they think they will need less money to build the cars.
Okay, so that's positive.
So they still need to pay much more than, of course, because inflation can, of course, have a lot of twists and turns and come out or strings out of the corner. But in this case, they say that they think they need to spend a little less than what was foreseen. So that might be positive. But
still, conclusion?
Debt-wise, be careful, give them time, and it might be very successful in a couple of years. But for the moment, I think be very, very careful.
Yeah.
And if you do it, it's a little bit of a gamble, I think.
Yeah.
I dare to say that.
Yeah.
Because you basically, think about it, you're giving money to somebody that is losing that money.
Yeah.
And then that guy might find a really good job in a couple of years, but he might also become, what do you call that? Some vagabond, no? Someone that lives in the street. So, it's a bit of a strange example, but I just made it up myself, but it is the truth, right? You give money to somebody that's always losing money, so why would you give them money?
Yeah, and we chose those stocks. There are more stocks. If you look at, for example, Spotify, they also don't make money. And there is, of course, I think a difference between a company that is there for a long time and never made money than a company that just has been started and there is music in. So there is, it can be good, but it's a gamble. So it can be proven, but so be careful. I think because there are a lot of other companies with better outlooks.
Yeah, I mean, of course, you mentioned also Facebook, Meta. Well, they also lost a quarter of their value, but they're still making money.
Yeah,
it's not like they're losing money.
And
they have a lot of assets. So
I think Warren Buffett won't buy this.
No, it has no value.
And
what about
Beyond Meat? Unfortunately, also I think a beautiful company. They were a pioneer with a good product, an alternative for meat, so a non-meat product. And they did an IPO in 2019, came on the market around 75, I believe, and then the share price went up to $239.
Yeah, that's insane.
And that was in the time that the whole sector. I think Warren Buffett also bought a stake in a similar company. Bill Gates did.
Yeah, it was really popular, the plant-based meats.
And the sector is facing really hard headwinds because
it's more expensive.
Yeah, but through inflation, people are more they are more careful what they buy in the supermarket, and those products are more expensive than real meat. So a lot of people swift back to the real meat product. So you see that in the revenues. It's not growing that hard. So, but that's for the whole sector. So 75, 239, now trading at 12. So that's even percentage-wise even bigger.
That's not good.
So then you think 12, you must buy it because it can go up. Even when it goes up to 50, you make a really huge profit, no?
Imagine if you buy it now, it goes back to 230.
Yeah, it can be, but I think it's a small chance.
Because why?
Okay. In the beginning of the year, they had 500 million in cash. They burned this year 250 million.
So say that again. They had beginning
500 million in cash, and they are burning 250 million this year.
That's half of your cash.
Yeah. And you can't do that for years.
No. Because I also read something once that they spend a lot on marketing as well.
Yeah.
That is one of their biggest problems.
And yeah, then in October, they still had the revenues were already brought down in October before the figures of the 9th of November from between estimated 470 million revenues to around 400. And the figures on the 9th of November were even a little bit less. They announced a mass layoff, 1,000 people. That's 19% of the people, and they save 39 million a year. And the CEO, that's also the founder, he said, okay, with this, I expect a positive cash flow, because they don't have
because they don't have those wages to be paying.
In the second part of next year. And that's, I think, that's fantastic to say, and that's what investors
should want to hear.
Yeah, but I think it's not true. The numbers don't match.
No, because it doesn't increase your production or anything. I think it's only costing more.
No, and if you revenues last year were 465. This year will be around 400, so less revenues. Okay, that's because of the headwind, can happen. The net income was last year minus 182 million. This year around 250 million. So they make a loss of 350 million. Okay, but that's still okay. But we don't.
No, it's not okay.
It's not okay. But there's another problem if you look at the assets and the debts.
Yeah.
Last year, 1.38 billion of assets against a debt of less, namely 1.16 billion. So they had something positive.
Yeah.
This year, estimated for the end of the year, a assets of 1.09 billion. And debt of 1.15 billion.
Yeah, that's not good.
So they have more debt than assets. And if you then burn 250 million a year, and can it be less because all the cuts you will do?
Exactly.
You can't survive.
No, you can't. And also with the higher interest rates, if they need to refinance,
if they want to give extra shares out, you don't get anything for the share. No. And on the other side, on the contrary, we made this analyze this morning, and it was closed yesterday at around 12, even less. And today, with the opening on Thursday, stock markets, everything went up. It went up 20%.
Yeah, so it has these extreme overreactions.
Yeah, 20%.
Because I think I looked at Rivian. They're part many times of also one of the biggest shareholders of Rivian is Vanguard. So they're probably part of a lot of ETF baskets. Yeah. That's going to be with this.
And Amazon, eh? No?
Yeah, well, they're not the biggest shareholder. I looked it up, but I don't think.
I think they sold it because I think they bought a big share. Then they ordered a lot of cars.
Yeah.
Then the price went up, and then I think they sold
the shares. You had to pay for the cars.
Yeah. Still, the analysts, but I think they will maybe adjust it. Is still 16. So it's now around 12, maybe $14. Target price is 16, but there is no analyst that hasn't buy advice on it. It's all hold or sell, and still it's at the 16. So I think it's a really strange. Unfortunately, I love the company, I love the product.
I think so. Yeah, it's a pity that these companies are.
Yeah, and in this good products. Yeah, and in this case, is don't catch a falling knife. No. Maybe something happens and they will survive and they will do something and they make a deal with other companies. That always can, but that's a real gamble. This is a gamble. Rivian is a gamble, but Beyond Meat is a big gamble.
It's a big gamble, yeah.
So I think that's what we want to say. A lot of companies went down, and a lot of companies are really interesting to buy now. You mentioned a few, but not all. No. So don't only look, it's 80% down, and what up? What goes down must go up. Exactly. Not always.
That's the most important message. I think that you should
even more do your homework.
Yeah, and that's not so much about these two companies. I think just also show people
practical examples
how we look at stocks, how we make it for ourselves, how we look at is this stock, why is it where it is?
Yeah. Be careful out there.
Absolutely.
Thank you.